Get on here, family. Get on here. What's going on? What's going on? Black Protocol, King Skyscraper, Peace, K Realist, Flawless by Rashada. What's going on? Emma, Prince, K Porter. What's going on? Go Kick, Go Chick. I don't know how to say that. Go Chick or Go Kick. What's going on, family? Listen, I want to talk to y'all about something that's extremely important. What's going on, M? Listen, I want to talk to y'all about something that's important. Who has taken my private banking blueprint course? Person number one.
Are you live?
Yep. You said you got the banking blueprint and it still charged me full price. You probably didn't go through abswealthbonder.com. If you click that private banking blueprint, that link that was in my bio, you would have got charged $249. Everybody else that got it got charged $127. That's the only way that you would have got it. Let's see. Probably bought it before I did the bundle bonus. And you saying now you saying that you didn't get it for 127. Probably bought it before. Boom. Listen, for those of you that don't know, it's still worth it's worth more than you got it for, because the price that you see that is full price is not even a full price. You still got the jug. Hold on 1 second. I'm about to show y'all the game. People are trying to wonder what's in private banking blueprint. Let me turn on my lamp right here. Turn on my lamp right here. I got y'all. Hold on real quick. Oh, for sure, Ken. So any course that's teaching you how to build your own bank and teaching you how to make money like the banks, it's definitely worth $500 off top. So listen, I'm about to show y'all how the banks. I'm about to show y'all how the banks are stealing your money. I appreciate that, M. Listen, we strive to be what's going on, family? Listen. If you're just now tuning in, I'm about to show y'all the bundle that you're getting. Then I'm about to prove how the banks are stealing your money and how you can maneuver and get yourself out the situation of being put in a hole. But before I started, I just want to make sure that y'all can hear me. Can y'all hear me clear? I want you to press the number 1 if you can hear me. I just want to make sure that y'all can hear me. All right, cool. So before I even set this up, I'm gonna show y'all something. Listen, y'all, we ain't playing no games. We ain't playing no games. We ain't playing no games. Oh, you couldn't hear him? I got you. You said that you couldn't hear him. That's okay. That's okay. So listen, before I'm about to show y'all some game, I'm gonna show you some numbers right here on my iPad. 'Cause I want to prove to you that the banks are stealing from you. The reason that the banks are stealing for you, the reason that the banks are stealing from you is because you have no idea that the banks are not your friend. The reason that the banks are stealing from you is because you have no idea that the banks are not your friend. So what I'm about to do, I'm about to take you down a journey and give you some facts about the banking system so that you can kind of understand why we teach you how to build your own banking system. And when you realize for yourself that these banks ain't your friend, maybe you will start to move a little differently. But before we get started, somebody asked, what is in the bonus for today? So private banking blueprint course, this is the full course, right? Look at this right here. Look at this. Look at this. All of this. Teaching you how to build your own banking system. Teach you how to build your own banking system. Look at this course. There's no, look at that, 45 minutes, 14 minutes, 17 minutes, 15 minutes. There's over 30 something plus lessons in this course and over 25 plus hours in this course. And you're about to get this course for free. 31 minutes, 17 minutes, 28 minutes, 18 minutes, 21 minutes, 12 minutes, 16 minutes. Watch this. 90 minutes, 73 minutes, 50 minutes, 29 minutes, 22 minutes, 126 minutes, 79 minutes, 94 minutes, 12 minutes, 96, 86 minutes, 68 minutes, 23 minutes, 107 minutes, 109 minutes, 80 minutes, 132 minutes. You cannot tell me there ain't no game. And guess what? Inside the ABS Wealth Bundle, you're getting this course free. Not only are you getting that course free, but you're also going to get access to this book where I statistically and scientifically prove how debt is the #1 cause of death in Black America. You're going to get this book, but you're going to get the curriculum that goes with the Private Banking Blueprint course. You're going to get the curriculum. Look how thick that book is. Look how big. So this is a MacBook screen. Look how tall and big this book is. Look at this. If you were to stand this book against that book, this book right here, and look inside, you're actually going to get curriculum that guides you along the process of taking the course on exactly how to build your own family banking system in your own family kingdom blueprint. Look at that. Look at this. Look at this. And you'll get this book plus this book and the course for free for a pair of shoes, 127 bucks. 127 bucks. You can learn how to build your own banking system. But let me tell you something. Most of us fail to realize that the banks are not our friends. Most of us fail to realize that the banks are not our friends, and I'll prove it to you here in a second. Because most of us, right, we're only taught wealth one way. We're only taught wealth one way. Let me show you how we're taught wealth. Let me show y'all say I'm tripping. Let me show you how wealth is taught. All of us are taught to be the business owner. Press the #1 if everyone knows that you're supposed to be the business owner. So the producer is the business owner, the real estate investor. The producer is the entrepreneur. The producer is anyone that's selling a product. The consumer is the customer. This is the person who is always buying something. They're always buying something. Now watch this. Watch this. Now watch this. Let me show you something. Now, the consumer is the one that's always buying. But all of the financial advisors tell us what? To leverage other people's money. What is other people's money? The bank. So people tell us to use credit cards, get points. So we borrow money from the bank. in exchange for money, interest, and points. We borrow money from the bank in exchange for money, interest, and points so that we can buy products from the producer. Well, what also does society teach us? Society teaches us as business owners to borrow money from the bank. Why? Because we're using other people's money. Society teaches us to borrow money from the bank. What does the bank give us? Money, interest rates, and points. We create products and then we sell those products to the customer. Here's the problem. The problem is that society makes you think that you're outwitting the bank because you're using their money to grow your wealth. But what you fail to realize is that the bank is making money from the customer and the bank is making money from the business owner. The bank is making money from the customer and the bank is making money from the business owner. The customer's on the shittiest end of the stick. So not only are they borrowing money from the bank, but now they're buying something from the producer, which is the business owner, and they're paying interest to do it. The business owner, they teach us, oh man, you the plug, bro. Bro, if you borrow money, I swear to God, bro, you use the bank money. So what you want to do, you want to use OPM, because when you use OPM, then you can go get a plug and you can get all these points using credit cards and shit, and you can just get over on the bank because they stupid. You don't think that the bank got this figured out? Who do you think makes all the money? The producer, the consumer, or the bank? Who you think make all the money? The producer, the consumer, or the bank? Who makes the money? Who make the money? The producer, the consumer, or the bank? Who you think? The customer, when they borrow money, they got to pay the bank back. The producer, after they borrow money, guess what they got to do? They got to pay the bank back. Guess what the bank did? The bank did one piece of paperwork, contract, one time, and from doing that contract one time, they get paid for a lifetime. It's very simple. Let's play the numbers again. So you got the bank. You got the customer. We want to get the Jimmy Choos. We want to get the clothes. We want to mortgage houses. We want to buy cars. We want to buy stuff that we can't afford. So what do? We typically borrow money because we can't afford it. And the bank charges us 4 to 28% to use its money. So what do? We borrow money so that we can buy things from the business owner, the producer. So we borrow money from the bank so that we can buy things from the business owner. Well, what has society taught the business owner? You want to use OPM. So you want to borrow money from the bank. The bank is going to give you money in exchange for 4 to 28% interest. Then your financial advisors tell you, hey man, listen, you want to have good credit, because when you got good credit, you can then go grow your company using the bank's money. And then when you use the bank's money, you go make your products, and then you getting rich using OPM. Let me tell you what the bank did. The bank set up one contract one time called loan paperwork. You signed it. They created a loan paperwork here one time. You signed it. And guess what? This little piece of paper took one time to sign, but it pays the bank for a lifetime. So you borrow money from the bank as a business owner to create products so that you can what? Sell, You sell your products to the customer. But what do you got to do after you make your profit? You got to pay the bank back. Well, what does the customer got to do after it buys its products? It has to pay the bank back. So the only person that's winning the entire time is the bank. So in exchange for whatever you wanted to buy, they gave you points. And you think that you're getting over on the bank because they're giving you points. And you don't even realize you're trading interest for points. So Jake, what you mean? Like Jake, explain it to me. I will. Where do the banks get their money? Where do the banks get their money? The bank gets their money from the customer. Wait a minute. So the customer funds the bank and then borrows money from the bank at 4 to 28%. That shit crazy as hell. So the bank cannot function without us putting money in it. How does the bank make money? Good question. The bank makes money like this. You put money in the bank. Because you put money in the bank agrees to pay you 1% to put your money in the bank. They pay you 1% for putting your money in the bank. Then they take your money and they go lend it out to other customers and business owners. And then the business owner pays the bank 28%, 4 to 28%, when they gave you only 1% to use your money. A lot of people say, well, the Federal Reserve is the one who creates the money. Yeah, the Federal Reserve creates the money, but a bank cannot function without depositors. This is what people fail to realize. The bank cannot function without people depositing money inside of the company. So it doesn't matter how much that company has that bank has in reserves. If that bank doesn't have depositors, it doesn't make money. Jake, what does that mean? I'll help you out. The bank cannot function without you putting money in it. The bank can't function without you putting money in it. So then the question is, well, Jake, well, you said that the bank is getting over on us. How is the bank getting over on us? Let's look at mortgage. Let's look at a mortgage. We're about to look at a mortgage calculator. Let's look at a mortgage calculator together. We're going to include taxes and fees. We're going to not include it. You want a $250,000 house. Right? You want a $250,000 house, right? Let's pull up a calculator. Let's do a calculator. You want a $250,000 house. The average interest rate on a property, a home, is about 1.1% for a 30-year fixed mortgage. You got a $250,000 house, 30-year fixed mortgage with the average interest rate of 4.1%. You pay $1,208 a month. Let's do math. $1,208 a month times How many months are in a, how many months? Hold on, let me do this so y'all don't think I'm lying to y'all. There are 12 months in a year. We're going to multiply 12 months in a year times 30 years. That's going to bring us to 360 months. 360 months times 1208. Let's do the math. Times 1208. That's the mortgage. How much does it say you pay for the house? How much is that? Put that in the chat. Come on, put that in the chat. Put that in the chat. How much does it say you pay for the house? How much does it say you pay for the house? Put it in the chat. Don't put another call. Don't put, how much does it say? 434,880. Okay, let's go back. Let's go back. For a $250,000 house, you paid $434,000. Let's minus the cost of the home. That means you paid an additional $184,000. I wonder who made this bread. So let's do some math. 184,000 divided into $434,880 equals 42.5%. 42.5%. Well, they said that the interest was 4.1%. So how when I do my math, does the calculation show that I really paid 42% in interest? And you know what they do to us? They give us suckers called dum-dum suckers. When we sign our mortgage, they give us dum-dum suckers because they really think that we dum-dum. And then y'all know what happens? Y'all know what happens? Maybe y'all don't want to know the truth. Maybe y'all don't want to know the truth. Y'all don't want to know the truth today. Y'all don't want to know the truth today. So I may not even keep going because clearly y'all don't want to know the truth. I honestly don't think that y'all really want to know the truth. I honestly don't think. I honestly don't think that y'all really want to know the truth. Does anybody know? Does anybody know Does anybody know what the average interest rate of appreciation for a house property? Anybody know the average interest rate, the percentage of interest for a property that appreciates every year on a house? The average. Anybody? Anybody want? Anybody know? Anybody want to take a guess? Anybody want to take a guess? Yeah, it's 3.8%. So let's do this. Let's do some math. Let's do some math. Let's do some math. We're about to do some math together. So for a $250,000 house, because I mortgaged for 30 years, we're able to see together. Let's start over so that people that are new. I went to the bank for a $250,000 house, 30-year fixed mortgage at a 4.1% interest rate. My monthly payment was $1,208. I do $1,208 times 360 months. I paid $434,880 for the property. So let's go to our handy dandy notebook and let's not notate that. $434,880. What we're doing now, we're actually doing something. Now what we got to do, we got to calculate the average maintenance work on a property. So you take 1 month's monthly, and then you do. Does anybody know how to calculate a maintenance rate? Anybody know how to calculate maintenance rate on a property? You typically, anybody know how to calculate it? This is my wife's. So let's do the maintenance on this property too. You take the monthly mortgage. You multiply it times 1.25, which is the average maintenance rate. 1.25. It's actually 1.25 to about 3%. So we'll do 1208 times 2%, because it's 1.25 to 3%. So we'll meet it. So we'll do 1250, 1208, and we'll multiply it by 2%. That gives us 2416. We divide 2416 divided by 12 months. That means that the average maintenance rate on this property is $201 a month, average maintenance rate. We're going to multiply this times 360 months, the mortgage. That's $72,480. So now we got to go to our handy dandy notebook, and we got to add $72,480 in maintenance. And this is the actual cost of home. So let's do some math together. 434. Are y'all following me? Are y'all following me? So let's do some math on how the banks are robbing us. Y'all think these banks your friend. 434, 880 plus $72,480 in maintenance fees. This is not including taxes. This equals $507. $507 $507,360 that you spent so far. That's the total cost of the home. This is for a 3-bedroom, 2-bath. Y'all ready? I'm not done. So now let's look up the average taxes on a property. What do y'all think the average taxes on a property is? What do y'all think the average tax rate? The average tax rate on a property. I haven't even done PMI. I'm getting there. Haven't done property mortgage insurance. Now I'm about to do taxes. The average tax rate is about, it depends on where you are in the United States, but they got it at maybe 1 to 4%, right? So what you do, you take the total cost of the house and then you multiply by the percentage rate, and that'll tell you what the tax is. No, the taxes are not included in the mortgage payments first, because the mortgage payments has nothing to do with the taxes. The taxes get added into the mortgage payments. So we're about to go to our handy dandy notepad. So let's go here. Total cost of the home. They said it was $250,000. So that's what it's going to go by. We're going to multiply that times 2%. So the total cost of the home was $250,000. We're going to multiply that times 2%. That means that our annual taxes will be $5,000. So we're going to do $5,000 annually in taxes times 30 years. That equals $150,000 in taxes. So let's go to our handy dandy notepad. So we're going to add taxes. $150,000 in taxes you paid over 30 years. So let's keep adding. So 507. So now we're going to add our taxes, 150,000, and we're going to add the 507,000. Where we get that from? That's the total cost of the home that you paid in interest over 30 years, plus the maintenance over 30 years. So let's do math. Plus $507, $7,360 equals $657,360. So let's go to the handy dandy notepad. So the total cost that we have on the property so far is $657,360. This includes mortgage over 30 years, maintenance over 30 years, and taxes over 30 years. What else am I missing? The average person, guess what? They pay property mortgage insurance. So let's look up the average cost of property mortgage insurance. Can anybody tell me the average cost of property mortgage insurance? Anybody? So I'm doing this for y'all because y'all be really thinking that the these banks are your friends. Hey, honey, I'm just teaching them the mortgage thing. I'll be to bed real quick. Let's look up property mortgage insurance. The average cost is .55 to .225. So we'll do 1%. So let's go to our calculator. We're going to do 250,000, which is the original loan cost, and we're going to multiply that times 1%. That's going to be $2,500 a year property tax. Property mortgage insurance. We're going to multiply that times 30 years. That equals $75,000. So now we're going to add $75,000 and property mortgage insurance to add to this whopping 657. And let's do some math. Plus 657,360. That equals $732,360. So you spend in total $732,360 that you spend for a $250,000 property. Go figure. So for everybody that says that borrowing money from the bank for mortgaging is a better cost efficient for the consumer, let's do the math. For a $250,000 house, you end up spending $732,360, including PMI, taxes, main, and mortgage. So let's continue. Let's continue, right? Because we continue to trust the bank and continue to trust these financial advisors and people that give you financial gain that's full of shit too. Let's go. So we're going to go to the appreciating calculator. So let's go and look at the numbers. So for a $250,000 home that appreciates at 3% every year, that's a lie. I just did it. Y'all stay tuned. Over 30 years. Let's refresh this. Appreciation calculator. We're going to do 30 years. We're going to do 3% yearly because it's not monthly. Look at that. So let's do the math. If your property grows 3% annually every year, like they say, your property will be worth $606,000. Your property will be worth. Hold on. I cannot believe this shit. Okay, so somebody put this in the comments. Write this number down: 732,360. Somebody put this in the comments. Harry. Put this in the comments. Put this number in the comments for me. All right. That's definitely a 2, not a 3. Okay, boom. So, because I got to clear this, right? Because we're going to do math. This is so fun. Aren't we having fun together? Aren't we having fun? Okay, so let's do some math, okay? So for a $250,000 property with a 3%
annual appreciation rate, your property will be worth $606,000. And what do the real estate professionals tell you? Man, you bought a house for $250,000, and in 30 years it will be worth $606,000. Well, for me, I just say show me the numbers. Don't run your mouth, show me the numbers. What we were able to prove together was that a $250,000 house mortgaged over 30 years will cost you $732,000. So let's do some math together, gang. Come with me to my handy dandy notepad. You ready? Let's go. So it says here, over 30 years, the property will be worth $606,000, 62 cents. So let's do math. The property cost you $732,000, including taxes, maintenance, mortgage, and PMI insurance. You put $732,000 into the property, but it's worth $606,000 at the end of 30 years. So let's do some damn math. That means I am negative. Wait a minute. That means my property is negative. My property's worth $606,815.62 in 30 years, minus the $732,360 that's put into the property. Your property is negative $125,544.38. How is this a asset? Anybody? So listen, real quick. So for all the real estate enthusiasts, real estate investors, and all you like people that try to teach my people to borrow money from the bank, show me the fucking numbers. Can you? Can you? No, you can't. Because the only thing you sell are emotions and on the naivety of our people. And I'm tired of y'all little dusty asses teaching our people that borrowing money and mortgaging a property for 30 years is equitable. The only thing y'all always say is, well, name an asset that grows in assets every year, and when you can put it in, you get your money back. Does this look like money back to you, clown? Does that look like money back to you? Let's do the math. I put $732,000 in a damn 3-bedroom, 2-bath house. The property 30 years later is worth $606,000, and I'm still negative $125,000 that I put into this funky ass house. And can I tell you a secret? Shh. The house didn't even really grow in value because inflation made the cost of the house actually go up. So you didn't actually earn more money. Your house just cost more to purchase because the value of the dollar diminished. Go take that back to your real estate king. Scamming asses. All of them. If you're a real estate professional watching my live right now and you selling mortgages to our people, you're a clown. You're a clown. If you're a real estate agent selling 30-year and you telling your people to get a 30-year mortgage, you a clown. You worse than a snake in the ground. Because how can you tell your people, I'm hitting my glasses off, to go get a 30-year mortgage and you don't add the numbers up, add the maintenance up, add the property insurance up, add the property taxes up, add the mortgage up. The numbers do not make sense. The only people who win are the banks. The bank. These are the same people that tell you, these are the same people who tell you that points are cool. Clown. Y'all don't real. If the banks created a product that steals money, are y'all kidding? That was, hold on, let me see how much. 30 years from now, y'all got a house. Y'all put $732,360 into, and then when you retire from working, the average black person got less than $10,000 in their retirement. Well, where the money go? To the bank. Duh. Y'all keep believing all these credit card is your friend. Credit card is your friend. Credit card is your friend. Credit card is your friend to the end. Yeah. Said credit card is your friend. Credit cards are your friends. Credit cards are your friends till the end. Y'all don't think that the banks got it figured out? They giving you points. You traveling for free. You got $50,000 in traveling points. How much interest do you think that you spent with them? Are you kidding me? Are you kidding me? Listen, I'm at a point. Well, if y'all aren't learning how to build your own bank, I literally built a course. I wrote a curriculum for you. I literally wrote a curriculum for you to teach you how to build your own bank. I literally wrote a curriculum for you to teach you how to build your own bank. I got a course and a curriculum in this book that proves that debt is the #1 cause of death in Black America, and I'm giving it to you for the price of some tennis shoes. $127, you can learn how to build your own bank. Keep the wealth in your house. Stop listening to these broke-ass clowns that are teaching you to borrow money from the bank, and their whole lifestyle is borrowed. Your whole lifestyle is borrowed. In Henderson Wealth Enterprises, that's actually not true. Credit cards actually do what's called daily interest rates. So the 22%, they break it down into daily interest rates. So you actually do pay interest daily, you just don't know. That's incorrect. When it comes to credit cards, they have the monthly interest rates. They take say it's 22%. They take the 22% interest, and it's called revolving. They call it something like revolving. They take the 22% interest revolving credit, and they divide it by 30 days, and that'll tell you how much interest they're charging you daily. They charge your interest daily. They sell it to you monthly, and they give you the illusion that if you pay it off before your statement, you pay no interest. That's a flat out lie. That's a lie. That's why it's called revolving credit and not fixed credit. It revolves daily. That's why. That's a lie. That's a lie. That's a lie. That's a lie. So that's why the banks tell you you get points. We thinking we outsmarting the bank. Well, if we think we're outsmarting the banks, and the bank charging us credit or interest daily. So what we gonna do? So what we gonna do? We gonna keep trusting the bank? You talking about the same bank? You talking about the same bank that was started by slave owners? So we talking about the banks that were started by slave owners that got a debt slave mentality? You don't think that they thought it all the way through to keep us in? Are you crazy? So let's do the math. So let's do the math. The question is, where do the banks put their money? So when the banks aren't lending money out, the question now becomes, where do the banks put their money? Press the number 1 if you want to know where the banks put their money. Press the number 1. Let's find where the banks put their money. So listen, not only do I bring you statistics and I just show you numbers that are without emotions, because I believe in a God that's not a God of emotions. I believe in a God of statistics, numbers, and science. If you're able to prove me statistically and by numerically that the numbers make sense, then I go with it. But if the numbers don't make sense, I don't go with it. You want to know why? Because I live in the world, but not of the world. So let's see where the banks put their money. There are 2 ways that the banks make their money. 1, they lend the money out, and 2, they lend the money out. That's how banks are profitable. Got it? So, you ready? You ready? Are you ready? Let's go. So, we're going to go to the FDIC. You know, the place that insures your money. Everybody always like to say, hey, I want to go to a bank that's insured by the FDIC. Did you know that the FDIC, the Federal Deposit Insurance Corporation, is funded by us, the people? Did you know that? And because we fund the insurance companies that fund and protect the banks, so when the banks get out of line, we actually pay for the fact that the banks get out of line, which means that the people, the board of directors who started the bank aren't really at risk at all. Did you know that? But let's continue real quick. So we're going to go to the FDIC. Let's see the numbers. Everybody can go to the FDIC.gov. And matter of fact, let me help you out so that you can do the research on your own, because I know that you're used to everybody lying to you because you also lie to yourself. So let's look at the numbers. So we're going to go to the FDIC.gov. Then we're going to go to the search engine and we're going to type in bank find. We're going to type in bank find. Okay, now when we click bank find, we're going to be able to go look up the assets and liabilities ledgers of the bank. Now let me tell you something. Did you know, because we fund the insurance companies, the insurance company that protects the bank's money? Did you know, because we're the funders, the public, did you know that we're the ones who can see the assets and liabilities ledger of every bank that is protected by the Federal Deposit Insurance Corporation? Did you know that? Let's look together. So, bank find. We're going to click the first one. Boom. We're going to scroll down and we want details and financials. Click that. So let's look up a bank, any bank. Let's look up Chase Bank. So we're going to look up JP Morgan Bank. Oh. They got sneaky. Hold on. They got sneaky. They always try to change this. They think I'm a fool. We're going to figure. So what happens every year? Got them. So my bad. I had to figure it out. So a lot of times what happens, because I go to this website a lot, the FDIC be changing shit on their website, but they can't hide it from the public. So let's look at Chase. Oops. Somebody said Wells Fargo. So let's look up Wells Fargo. WELLSFARGO. Wells Fargo. Let's look up where Wells Fargo puts their money. Wells Fargo. We're going to click Wells Fargo. What's that say? Wells Fargo Bank, National Association, November 5th, 20. What's this? November 5th, 2020. It is currently November 7th. So this was as of 2 days ago. We're going to click Generate Report. We're going to look up their assets and liabilities ledger. Are y'all ready? Y'all ready? What if I told you that banks don't even trust putting money in properties? Would you believe me? I'm about to show you how banks don't even put more money in properties than in a special resource and reserve that I'm about to teach you real quick. So a lot of people say real estate, real estate, real estate. But the truth is the banks make money on real estate by lending to the people who want to do real estate. Go figure. Why? Because they can make passive income monthly without actually having to be at the property. And they make you do all of the work. Man, that shit is genius as hell. So let's keep going. So let's look up bank premises. Line 10. Line 10. The bank has, oh, let me go back up. It says dollar figures in thousands. What does that say? Dollar figures in thousands. So what does that mean? For those of you guys that didn't pay attention to math because you was back there acting an ass and you should have been listening, dollar figures in thousands means that any number that we see, we have to add 3 zeros to it at the end. 3 zeros to it at the end. 3 zeros to it. Say it with me now. 3 zeros to it at, come on now. 3 zeros to it at the end. 3 zeros to it at the end. 3, 2. Say it with me. 3 zeros to it at the end. Say 3 zeros, put it at the end. 3 zeros, put it at the end. Say 3 0. I gotta say that because some of y'all was bad as hell in class, and you know, I gotta help keep y'all attention because y'all forgot I was a teacher. Y'all forgot I was a teacher. So because I was a certified teacher, I know some of y'all was some badass kids, and I gotta kind of entertain and educate at the same time because 3 0, put it at the end. Got it? So let's continue. Boom. So we're gonna add 3 zeros and put it at the end. So let's look at how much money they put in real estate. Line number 10 and line number 11. Line number 10 says they put, let's add 3 zeros, class. Let's add 3 zeros. That means they put $11.5 billion, inside of bank premises and fixed assets. Let's add other real estate. Let's see when they say other real estate, how much do they put in other real estate? Notice that the bank has 190 million dollars in real estate, but they have no dollars in multi-residential real estate. They have $0 there. I wonder why. Well, the reason that the banks have $0 in multi-family properties because multi-family properties considered are higher risk. So they put all of the risk on you so they can get passive income from the mortgage. Go figure. Why would they do that? Because banks are known for taking the guaranteed positions. Positions that give them authority and less liability so that you're the one taking the risk. That's why they make you get property mortgage insurance. So when you default on your mortgage, not only do they get the money that they lent to you, but then they can go sell the property in foreclosure, still being profitable. And you still trust the bank? Let's continue. So multifamilies. Oh, notice the $190 million that they have in real estate. 1 to 4, that they stay in the 1 to 4 family residential properties. Why? Because it's easier to sell and get out of the position for 1 to 4 family residentials than it is multifamily. Go fucking figure. So let's go back. 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 Hey, let's go back. Let's go back. Hey, back. Let's go back. Come on, go back. So we're going to go back to line 10 and 11. Line 10 and 11, so y'all don't think I'm lying. That's FDIC.gov. For all of your gurus who don't show you any statistics, they just give you their opinion. I'm giving you what the banks are doing. Bank premises. So collectively, let's add these numbers together. They put about $11.7 billion in real estate and bank premises. Well, you have to consider bank premises to be real estate because those are their properties. You ready? You ready? You ready? You ready? So they put 11.7. Don't let me tell you. What number does that say? That's 1, 6, 8, 9, 10, 11, 12, 13, 14, 15, 16, 6, 1. So that's $11.7 billion that, you remember, we got to add 3 zeros, billion dollars that they put in real estate. Let's see, where else do they put their money? We're going to scroll down on the assets and liabilities ledger. Let's go to line 41. Oh shit. Life insurance assets. How much money? They put $19.1 billion, add 3 zeros, $19.1 billion in life insurance assets, but they only put $11.7 billion. That's $8 billion more dollars inside of life insurance policies than they do real estate. I wonder why. Should we continue? Should we continue? You got to do it through your phone. You can't look up the website from your computer. You have to look up the website through your phone. It's going to be an auto-generated text that pops up, and then you click send, and then it'll send you the link. You got to do it through your phone. Let's continue. Okay. So let's go. So they put $19.1 billion in life insurance assets, general account and separate account. So wait a minute, Jake. Wait. Why would the bank put liquid cash inside of life insurance policies if you can only get the life insurance policies when we die? That doesn't make sense. Of course it doesn't make sense, because that's not how life insurance really works. Wait a minute, Jake. Life insurance works different? Oh, you didn't know? You keep listening to them bust-ass financial advisors that are leading you down the wrong road. Should we continue? Anybody? Somebody give me another bank. That was Wells Fargo. Do we want to try another bank, or do you trust me yet? Do I have your attention? Please tell me that I do. Anybody? Do I have your attention, please? Navy Federal is a credit union. Let's try Chase. Y'all ready? Let's try Chase. Let's try Chase. Let's try Chase. Let's try Chase. So I gotta edutain y'all because y'all be getting like off whack, a little bit, and so I gotta like edutain y'all because y'all be not really paying attention. And so since this is class and I know y'all really don't be paying attention, let me help you out. So let's try Chase. Is Chase any different? On the FDIC.gov. Little quick history lesson. The reason why I like credit unions and not banks is because credit unions are actually owned by the members. They're not trying to turn a profit to give to shareholders. They're trying to be profitable to keep the rates down and give more interest back to the members. What does that mean? That means that banks are typically stock companies. You know what a stock company is? A stock company's number one job is not for you to be okay as the account holder, is to make more money for the shareholders who own some of the stock. So you're going to get screwed no matter what. Let's continue. Chase Bank. It says November 5th. It is the 7th today. So that was 2 days ago. Let's continue. Remember, dollar figures in thousands. Add 3 zeros to the back. 3 zeros to the back. I said add 3 zeros to the back. Add 3 zeros to the back. Yeah. Let's continue. So let's go back to line number 10 and line number 11. It says that they put $23 billion. Remember, add 3 zeros. They put $23 billion in real estate. $23 billion in real estate. Let's see how much money they put in life insurance assets. Boom. Life insurance assets. They put $11.7 billion. Wait a minute. So they put more in real estate, Chase does, but they still got $11.7 billion in life insurance. Now, let's go look up one of the oldest banks in America. Can we go look up Bank of America? Can we? Let's do it, please. So let's go look up Bank of America together. Together forever. Let me look up Bank of America before y'all think I'm over here scamming y'all, because y'all listen to these people living on credit and don't listen to the dude who said he built his own damn bank. Y'all don't listen to the guy who says he built his own banking system and is teaching you how to do it. You listen to the people that says, hey, you want credit? You want to leverage other people's money? Just swipe the credit card, give me some trade lines, and I'll help you with your credit. You ready? Let's keep going. Let's go. Bank of America. America is great again. Y'all gonna notice why banks give your ass dumb suckers. Sucker. November 5th. Let's generate the report. Let's go back. Line number 10 and 11. Oh, have you not noticed that they all keep their assets and liabilities ledger on the same thing? Bank premises, real estate together, $19.2 billion they put in real estate. Let's see what they put in insurance. They put $22.6 billion in life insurance assets. Wait a damn minute. Wait a minute. Wait a minute. Wait a minute. Bank of America puts more money in life insurance assets than they do real estate? Now the question is, why do they do that? Let's check. I'm going to look up. Look, I'm so intelligent. Look at what I'm going to Google. I'm going to Google, you ready? What? Let me make it bigger for you. What is bank-owned life insurance? Let's look it up, family, together. Wait a minute, Jake. Wait a minute. Wait. Jake, you teaching us not based on your opinion, like these other financial gurus that you love so much and that you follow and you listen to every motherfucking thing that they tell you, but they broke as fuck. You're actually showing us documentation that we can go look up ourselves. Let's continue. Why do banks put money inside of insurance policies? Let's read together. Bank-owned life insurance is a form of life insurance purchased by banks. Duh. Where the bank is the beneficiary and usually the owner of the policy. Duh. Let's get to the point. Such insurance is used as a tax shelter. Wait a minute. Wait a minute. Bank-owned life insurance? They use it for a tax shelter. Well, I'm not the smartest tool shed in the toolbox, so let's continue to read together. Let's go to handy dandy Google, y'all. Let's go to Google and let's type in Google, let's type in what the hell is a shelter? Because I don't want to assume that we know anything. A shelter is to protect or shield from something harmful. Protect or shield from something harmful. It said that banks use insurance as a tax shelter, which means taxes harm your money, so they put their money inside of a tax shelter that protects it from taxes for the financial institution. And they leverage its tax-free savings provision as a funding mechanism for employee benefits. Wait a minute. 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 So banks put money inside of life insurance policies so it can be protected from taxes. And it said that the money grows tax-free. What? Jake, why don't I know about these insurance policies? You want to know why you don't? Let's read together. But guess what they told us about life insurance? Life insurance only protects you when you die. So why do banks have a different type of policy that protects your cash? Can we continue? Let's. Jim Crow life insurance rates. Jim Crow. So, guess what? When you Google Jim Crow life insurance rates, guess what happens? A PDF comes up by a lady who was a scholar at Northwestern named Mary Heen. Let's continue. So, I'm about to burst a myth for you. Y'all ready for me to burst a little myth for you? They told us that you can only get life insurance and it only protects you when you die. Let's see if the slave masters thought the same. Insurance companies provided slaveholders, which is a slave owner, coverage for the damage to or death of their slaves. Wait a minute. Insurance companies provided slave owners coverage for the damage to or death of their slave. Okay, I get death. Wait, they got paid when we died? Wait, the insurance company also paid them when we got damaged? I wonder what is damaged. Heart attack, stroke, renal failure, cancer, dismemberment of body parts. That's why they didn't give a fuck if we lost our arms, because they got paid from it. Did you know that you can get paid from it too? Did you know that? Your policies can do the same. But the problem is, y'all think that life insurance is an extra when it should be your guarantees. Should we continue? Let's read it. Let's read it. Let's read it. Let's read it. Oh, And can I tell you something? Can I tell y'all something? Can I tell y'all something? Can I tell y'all something? And some of you are like, damn shit, like I got that good insurance policy. You know, you want me to tell you want me to show you how I know you don't? Because if you don't know what I'm teaching you right now, odds are you have the wrong policy. Wait, Jake, what you mean? All insurance policies aren't the same? Oh, shucks. Your insurance agent probably was just an agent that was trying to make some money, probably part-time, that wasn't a practitioner, that didn't write freaking books about it. It's okay. I'm not mad. You can just continue to talk to those financial advisors or strategists that make money on you and play off of your stupidity. That's why we make everybody go through our course before we actually put them in a policy, because an uneducated person is easily taken advantage of, but you would rather stay uneducated, wouldn't you? Because it's easy for you to say, my mama didn't teach me. Okay, let's continue. So let's read this together. I wonder why we didn't know about this type of life insurance. Let's read. It says, following the Civil War, race-based practices first emerged in a specialized form of life insurance marketed to low-income working people. Well, I wonder who the fuck was a low-income working people? Poor whites and what else? Race-based practices. Let's continue. Beginning in the 1870s, newly formed American life insurance companies, insurance, doesn't matter, so small individual policies to a growing market of low-income wage earners. I wonder who the growing market was. Okay, white people don't just birth out grown-ass kids, so it must have been black motherfuckers, right? Black motherfuckers, black people. This type of life insurance, called industrial or burial insurance, they sold us death insurance, provided protection against the financial burden of a last illness or burial. For they called us the industrious class. Did you know that we were purposely sold policies that only protected us if we die? Which is why you probably don't know anything about the type of insurance I'm talking about. The type of insurance that banks don't store cash inside of it because there is some type of benefit to it. Have you noticed that? So, Jake, what are you trying to say? I'm telling you something, and this is what I'm telling you. I built the whole entire course that I'm giving you for free on how to build your own private bank using insurance the same way that banks do. Over 28 plus hours, over 30 something plus lessons, as you can tell. And I show you how to make money being the bank and how to build your own banking system. Look at how long some of these classes are. And I'm about to give it to you for free. You know the only thing that you're going to be able to have to purchase? So for a price of sneakers, I'm about to teach you the game on how to build your own banking system. But you want to know what's going to happen? A lot of y'all are going to make the excuse on why you can't do it. Well, don't come to me when your ass broke like your mentors. Because whether you believe it or not, just because your mentors drive fancy cars, it doesn't mean that they're not living paycheck to paycheck with their broke ass. Okay? Got it. So not only in this book right here, you're going to get a physical copy of this book that says, We Are Sick. In this book, I statistically and scientifically prove how debt is the #1 cause of death in Black America. If you don't believe me, read this book and you'll become a believer. Here, I also wrote a book. Look how big my hand is. I'm a 6'2" big guy. Call me Big God. Private Banking Blueprint. Look how thick this book is. You're going to get a curriculum. Wait a minute, Jake. You wrote a textbook to go with your course? Oh, y'all thought I was playing? I'm a practitioner. That's why hold on one second. For some of you guys that don't believe me, watch what happens when I type my name in Google. Jake Taylor Jacobs, Google. We're going to do Google. Wait a minute. Jake Taylor Jacobs is in Forbes? Wait a minute. This black man that's teaching us how to build, he in Forbes? Forbes? He's on the council? That got it. Wait a minute. Wait. He's a 2-time author, wrote a curriculum? He got a degree in education, built a multiple 7-figure company with his brother BX, and he's teaching us how to build our own banking system. And he tells us all the time how he built his life without borrowing money from the bank. And we still listening to other people talking about borrowing money from the bank. Hey, can I tell y'all a secret? The reason why I don't have a lot of followers is because I just got on Instagram for real this year. And I didn't buy followers like some of your friends that you follow. Let's continue. So, wait. So this black kid. Oh, and I'm only 29, not even 30 yet. And we have a staff full of black people that we hired. 22 to be exact, 13 that are full-time staff. And did I tell you that we've never borrowed money from the bank? Did I tell you that? I didn't tell you that yet. Well, we never borrowed money from the bank because we built our own shit. And I'm teaching you how to do it too. But some of you guys are still not going to take advantage of the opportunity because you're so skeptical, but you'd rather go listen to somebody that teaches you how to build your credit score. And then they put trade lines on your shit because you really didn't build your credit score for real. They're teaching you how to buy somebody else's trade lines and build up your score so you can borrow money from the bank to be in debt again, to leverage that debt to get financially free. But then you get hooked on the debt because you're so used to using other people's money when the money wasn't yours in the first place because your daddy, granny, you, or not even your mama owned the dollar bill, which means that it's stupid people teaching stupid people how to be stupid. You don't want to be stupid, do you? No. Let's continue. So in this book, oh yeah, we don't have like Dr. Seuss letter words. We actually have, wait a minute. There's like case studies in here. No. I just started getting on Instagram like in February. Like for real. I used to use Instagram like a personal page, you know, just to like be personal and shit. Had 3,000 followers in February. But when I got on Instagram and I started giving the game like on social media because Brother Ben X made me, I realized how many people were stupid. Not you, I'm talking about the financial advisors teaching y'all bullshit. So that's why I decided to go hard. And apparently you cousins love me, but don't love me enough because you're not listening to me when I'm telling you that I can teach you how to build your own banking system because I did it for myself. You see this Rolex? Guess what? I bought it with my own banking system. I know y'all like things. Y'all like flashy stuff to make it look like, oh my gosh, this person's actually doing well. So let me go down the stairs in my rented house. We don't know why? Because we don't mortgage because it's a scam. Oh yeah, and also I'm going to teach you exactly how to be able to own where you rent. Wait, Jake, you said I can be able to own where I rent? Oh, you talking about this house right here? Oh no, I'm not stunting to tell you that I own the house because I don't. And I'm not going to mortgage the house because I won't. Because I know I just showed you guys the numbers of what happens when you mortgage. Duh. Only under 10 years does mortgage make sense. Because when you pay off your debt, you end up paying like maybe like $10,000, $20,000 of interest, but you don't want to do that. You want to keep listening to people that tell you 30-year mortgage because it's good for you, because you can write it off on your taxes. Just open up an LLC. You can write shit off the same. Okay, let's continue. So let's go into my garage that's rented. Because y'all like fancy stuff. You know, this is a Lexus. That's an S550. I don't know if you can tell. Let me back up real quick for the light. But yeah, I mean, because, you know, some of y'all like people like to kind of show you stuff to make it look like, oh, they're like popping or whatever. So that's the only reason I showed you, because a lot of y'all like things that are like popping, you know, like that pops and stuff. So I'm just going to show you that. So not only did we buy
our cars with our own bank. We built our multiple seven-figure company with our own bank, and my daughter's education is already paid with my own. Matter of fact, my daughter has never seen the inside of a bank because when she needs to get money at 5 years old, she knows that she has her own bank. Anyway, let me get to the point. For $127, you get a full lesson course for free. There's over 28 hours, over 30 plus lessons inside of that course. I'm giving it to you for free. Only thing that you got to pay for is the curriculum in the book. That's it. You pay for the books, you get the course free, and it's only going to be around for 14 days. Yep, I said it. Only going to be around for 14 days. I've been talking so long, you guys are making me want to drink, and I haven't drank in a minute because, like, I'm on this, like, non-drinking thing. I don't know why, but I can't have communion for a while. So, long story short, the link below, it says abswealthbundle.com. You go to it on your phone, abswealthbundle.com, and I'm going to actually teach you how to build your own banking system. And guess what? Because we're actually licensed, when you finish the course, I have licensed advisors that will help you put your bank in order. Isn't that crazy? So not only am I teaching the course and giving you all the stuff that you need, we're actually licensed and certified to actually help you start your own banking system. Well, Jake, the question is, I already have the money. Can I just start my banking system? No, because you're not educated. Don't we understand the cycle that we be in, not being educated and jumping into stuff because things sound good? I would much rather educate you first and then put you in a position of authority to help you build your own banking system, then to just get you excited, sign you up for your own bank, and then just take your money. $127. $127. Price of tennis shoes. You can learn how to build your own bank. Stop borrowing money from the bank and stop listening to these bozos. Did you not know that these banks, the board of directors, are the people who started the banks? The board of directors are typically families of people who started the banks, and they profit off the banks because they own the banks. So every time you borrow money from the bank and you pay interest to the bank, you're making somebody else's families rich. Don't you want to be rich? Don't you want to keep that cash for yourself and build your own bank and then take your life to the next level? You said, when we get the course, will it tell us where to get the policy? No. When you get the course, it's going to teach you everything that you need to know about banking with insurance and building your own family blueprint. And then you're going to set up an appointment with one of our advisors, and then we're going to help you put your banks in place. Well, Jake, how come you wouldn't give me the company? Because some of y'all are in my industry and you're my competition, and I want our company to crush you. It's very simple. If you want to know the companies, either become a client or become one of my advisors. Other than that, you ain't getting the secret sauce. Wow, Jake, why would you be like that? I thought you're for the people. I am absolutely for the people, but I ain't no dummy. Come on now. No dummy here. I built a successful company with my team for a reason. You wanna know why? Because I'm in business. So always be leery of that business person that's giving you all the game and all of the secrets to their industry, and they're in the industry. 9 times out of 10, they're either not really popping like that and making money off teaching you, or they're getting out the industry because they sucked, or they're getting out the industry because it's saturated and they rather teach you what they used to know so that they can make money on what they knew so they can get out the industry, because a lot of people are starting to do it. But let me tell you something. As long as my company is in this industry, you will not know all of our secrets unless you work with us. Other than that, you will become our client and we will help you build your private bank so that you can be successful. Don't you want to work with a company and an actual educator that has an academy, that actually owns a real company? Wouldn't you trust a guy like that?
I would trust that guy. I would trust the guy that actually owns a company that is teaching me how to properly utilize a product that his company sells. Yes. Yes. The book actually does teach you how to put your money in a life insurance reserve. That's the whole purpose of the course. The reason why we created the course is because we want to create the perfect customer or client. That's it. We started the course so that you will want to become our client. So we will much rather you pay $127 to learn, to see if it's something that you actually are going to be committed to doing before we waste each other's time. That's actually a perfect business model that you should probably adopt for yourself. That's why we are so good. Not being like cocky, but I'm being confident because we're good like that. How long is the course? It's 28 hours. It's 28 hours. There are questions that you got to answer throughout the course so that when you actually do get an appointment with an advisor, you actually have proof that you passed the little quizzes so that you know what you're doing before you get into the policy. 28 hours, 30-something plus lessons. No, they're not 28 hours. I feel like y'all are fucking with me. Are y'all fucking with me? I feel like y'all are fucking with me. Why are y'all fucking with me? I know I went over this already. I know I did. If y'all are new to me, this is just me. I love you. I cuss. I love God and all of that. But I really feel like y'all are fucking with me. I swear I went over this. I promise I did. This is all that's in the course. It's not straight hours. It's broken up to go side by side with the curriculum. It's broken up to go side by side with the curriculum. Okay, Black Queen. Look. So this goes side by side with this. We actually built a textbook that has pictures and points in it that goes with the course. Look how thick this is. You go at your own pace. I will go at the pace where you actually can learn it and understand it and comprehend it, and then set up an appointment with one of our advisors at the end. No, I'm not saving this live. Well, I may save this live. I think I'll save this live. Do we have to finish the course in a certain amount of time? No, it's self-paced. It's self-paced. It's up to you. It's self-paced. It's up to you. What's going on?
What's going on, man?
Hey, listen, man, I'm just living my best life. Tell the people how good this course is. Come on.
Hey, hold up. I don't know how to flip this camera.
Come on.
This book right here, bro. When I tell people this book, after reading the book, I'm sorry, I'm a little bit nervous. I never went live before. But so how I came across you is just so how I grew up, never had money. My family never had money. Nobody I ever knew had money. Nobody in my community had money. So just always growing up, seeing my dad never have money. And I always wanted to be better, you know what I mean? So just searching, just going down a dark hole of like how to create generational wealth and just searching, I came across you and ended up going on your YouTube, watching, going all the way back, checking all your videos out, going on your IG, and you were actually doing the wealth bundle sale a few months ago. And then I went on the website and I saw the full price for it. So I looked at the modulars, your curriculum. I went to the institute, seeing everything you had in your institute in the actual private banking blueprint course. And I'm like, damn, he put all this in here for this discounted price. So I saw the price, and I'm like, went on your YouTube, did a bunch of research on you, and I'm like, this dude's the truth. So I actually made it a point I went to your main page and I paid full price for it because I saw the value in it. And after actually taking the course and just after the master class, I went and talked to my wife. And after watching, I'm like, yo, this is like legit. This is like the key to life, like the blueprint to having becoming financially free. And that's something that I always wanted to be, you know what I mean? And just like after watching something or reading something, you know how powerful that is to know that, like, that's like these books and this information is life changing.
Yeah.
So it's just like, and I talked to Shannon, I'm setting that up and I'm setting my own policy up and everything. But yeah, the information in these books, just like you say, the facts, research, logic, you know what I mean? Like, this is the truth. You're the truth. You know what I mean? So
in going through the course, how often did I bring facts and research over my opinion?
Yeah, there was no opinion. It was all the truth. You know what I mean? So me being white, like you talking about the slave owners and shit, and my wife's black. You know what I mean? So that shit, that's hard to, you know what I mean? Like me, I'm like, damn, them motherfuckers are fucked up to like see how. But it's the truth. You know what I mean? That's just how it is. So like that's hard. You know what I mean? And I follow brother Ben too. So
yeah,
it's just crazy to think like that I'm gaining a lot of knowledge and learning a lot from black men, you know what I mean?
Yeah.
So it's just crazy, like to think hundreds of years ago, for them to see this, that shit would hurt them, you know what I mean?
Yeah.
So it's just super powerful. But yeah, what you're doing, bro, I'm super appreciative, and I honestly feel like my policy, and I ain't even set my shit up yet, but like just from this information, my computer died, so I can't even show everybody, but like how much information is in those modulars, bro? I gotta ask you, you don't need the money. Why are you doing it why are you even discounting it that much? Like, it's worth more than that. You need to be selling that for more.
Yeah. No, man, you know, I love the people, bro. I don't know why, bro. I just remember when I was broke as hell and I could sell it for more, but there are so many that's getting screwed by so many people with these crazy prices that in order for me to kind of just get people to just get inside to see for themselves, I just dropped the price down because since we run a real company, we don't need the courses to be profitable. So yeah. I can do whatever I want with the prices because we don't depend on the courses. And it's really because I love the people. But this may be the last time I drop it, bro.
Now you say that, I mean, like after reading it and just like a bunch of my friends, I'm 30, so a lot of people, my friends are getting mortgages, getting houses and everything. And like after figuring out all this information, it's hard to like not spread this information, you know what I mean? But that's why I wanted to join the ABS Advisor Program. I kind of procrastinated. I had a lot going on, so I kind of procrastinated, but I was definitely interested in that. And
so listen, this is what I'm going to do for you, bro. Reach out to Chandler, and I'm going to bring you into the ABS Advisors Program free.
All right, thanks, bro.
Yeah, I'm gonna bring you into the ABS because you got the spirit. I'm looking right into you. I'm gonna bring you into the ABS Advisors Program free. We gonna pay for your license. We gonna pay for your test. We gonna pay for your tax certification. We're gonna pay for it all because I think it's very important for people like you that ain't scared of black folk to learn the information and go and teach a specific community that we probably wouldn't teach or be able to reach and teach just because of that. So I'm going to bring you to reach out to Chandler and tell her that you talked to me. She's going to reach out to me. We're going to take care of you. We're going to get you in the ABS Advisors Program.
Cool.
Bro.
Yeah, appreciate it, bro.
For sure, bro. For sure.
Yeah,
I appreciate you, bro.
When you asked me, I was just getting out the shower.
All right, man. All right. Yeah, we're gonna get them on there, huh? Who? Hey, somebody. Hey. Hey. Once you finish the course, do you have a certain amount of money or a minimum to put into the policy? No. You got to talk to the advisor. They're going to comb through your finances. They're going to comb through your number. They're going to comb through all of that, and y'all are going to decide together. You got to go through suitability. We got to go through all of that. You need $127 for the course. You click the link in the bio. Somebody press the number 1 if you've been through my course before, and you'll go live and give a testimony. Press the number 1 if you've been through my course before, and you'll go live and you'll give a testimony. Hey, listen, here's the deal. You got to go to the abswealthbundle.com from your phone. You got to go to the abswealthbundle.com from your phone. You cannot go through it through the computer because it won't work. Go to the abswealthbundle.com through your phone, and then you're going to see it's going to pop up like a text message, and it's going to be an automated text message that's inside your text, and then you're going to click send. When you click send with that automated text message, click send, the link is going to pop up. You purchase it through there. So listen, I gotta go toe cuddle with my wife, but let me tell you something. I love you. There's absolutely nothing you can do about it. And let me tell you something. I give straight facts. And a lot of people, they bring their opinion. They bring and tell you what the white man doing and what the gray man doing and what the green man doing. And I'm showing you straight numbers. I ain't gonna play with you. I'm gonna stay with you. But if you want to stay with me, you got to follow the blueprint so I can teach you how to build your own bank too. But you got to decide, do I want to be in the world and stay a slave, or do I want to get free? If I want to get free, you need to be talking to a free man. You got it? I love you.